Hey everyone, and thank you very much for joining me. This is the morning market review. It's Monday, the 12th of June, 2023. My name is Russell Shaw, I'm a senior market specialist at FXCM. My email address rshaw@fxcm.com. Just going to bring up the disclaimers. We'll start off with a high risk investment warning. And here's our market commentaries disclaimer. Hey Mia, morning to you. Nice to have you on the webinar. Thank you everyone for joining this morning. Much appreciated as always. All right, here's our references, MarketScope 2.0 and TradingView.com. We'll just bring up TradingView very quickly just to show the divergence between the 2-year yield and the dollar. This is a relationship I want to keep analyzing. Just want to make sure that we are on top of it. So you can see that the 2-year yield is moving in that northeast direction, and the dollar, we've got actually a divergence here. We've got a lower peak. So what we can do is we can go through to our MarketScope 2.0, and what we can do is we can take the question mark out. Okay, so it's now, I think, a lower peak. Why is it a lower peak? Because last week completed a reference candle, right? Here's the reference candle high. So a reference candle is the highest high in at least 3 candles, and then last week closed below the reference candle's low. So I'm quite happy to make this the lower peak, and that is a sideways consolidation. It looks like we've got a symmetrical triangle until proven otherwise. That's going to make it tough for us as traders, because when the dollar trends, it tends to filter through to other instruments, and when the other instruments are trending, well, we're in business, right? You can take a look at the, I think this is a 34-week moving average. Let me just double check here. Yeah, it's a 34, and you can see how the price is just chopping across the 34-week moving average. What that is effectively telling me, it's consolidation. A moving average is a trend following indicator. It works well when there are trends. It works poorly when there is no trend, when there's congestion. What have we got here? Congestion. And you can take a look at the RSI. RSI is popping up and below the 50. So it's not first prize what's happening with the US dollar. The US dollar is moving sideways. I think what's happening here is it is preparing for a hold this coming Wednesday. We're going to get the Federal Open Market Committee making its statement. I believe they're going to hold interest rates steady. But we want to see what kind of communication comes out from them. If it's hawkish, then perhaps we get a challenge of the upper boundary. Not sure how dovish they can be, but of course, if it is dovish, perhaps we get a movement towards a lower boundary. Let's see what kind of communication we get come Wednesday. All right. We've got the chop to the sideways on the weekly, but we do have perhaps some sort of pressure to the downside because of the recent reference candle to the downside. So if we've got this recent reference candle to the downside, what's happening on the daily chart? Let's take a look and see what's happening on the daily chart. And you can see that we are in zone 3. Okay, zone 3 is between the lower blue and the lower red. The RSI has dipped below 50. So on the daily chart, we're getting some bearishness in. And if we're getting some bearishness on the daily chart, it suggests perhaps we look to resistance areas to see if those hold. Okay, even if you take a look at Friday's candle, what can we see with Friday's candle? Sorry, it's pointing. There we go. We got market participants that pushed price up to the high for Friday. At the high, the bulls lose control to the bears. The bears push price right down. And we want to see if the bears are going to maintain some sort of control today. So let's take a look and see what's happening on the hourly chart here. And perhaps some sort of bearishness coming through. It's not absolute. We're just going to keep an eye on this. We've got the moving averages, which are, remember, they trend following indicators. They are crossing to the downside. What we need effectively is for those trend following indicators to show angle and separation to the downside. Take a look what's happening to the stochastic. Stochastic's crossing over bearishly. Well, if we're getting the moving averages to cross over bearishly, and if we're getting the stochastic, which is momentum based, to cross over bearishly, well, we want to see if the momentum carries downwards. And if we get the oscillator moving to the 20, sort of the 20 minus areas, I would suggest that there is an underlying bearish momentum potentially pushing the greenback towards the downside. So I wouldn't be surprised to see some sort of weakness coming in on the greenback. If we're getting some sort of weakness on the greenback, let's see what's happening on the euro. Theoretically, the euro should be moving in the opposite direction. Let's take a look and see some sort of analysis on the euro side. So let's cross over to euro US dollar. All right, I'm just waiting. Here we go. Okay, let's start from the weekly. All right, now remember we want to try and marry this type of analysis with the US dollar. The US dollar, we had a sideways symmetrical triangle, but we had the last reference candle was to the downside. Well, that looks to be coinciding with the support at this 30-week moving average. Okay. What we don't have is a bullish reference candle here yet. So we just got to see if there is going to be a bullish reference candle. And here's the line in the sand. We'd also need to get the RSI popping back above 50. So a little bit of a lag here on the euro US dollar. Nevertheless, there is some support that has come in here. We do have the higher trough, higher peak. Potentially another higher trough here. I think what we can do is we can put in HT question mark. We can't take out the question mark yet because we need to get a bullish reference candle in. Okay, we don't have the bullish reference candle in just yet. Let's just line these up. 868. Yeah, there we go. All right. Nevertheless, it does look like there's some support here. You can see it's right on this moving average. Let's go up to the. I beg your pardon. Let's go down to the daily chart. See what's happening here. Okay, so we're in neutral. We're in neutral on the daily. That makes sense because of the lack of bullish reference candle on the weekly. What we can say though, is that we have moved from zone 3, so we've moved from weakness into neutrality. So a movement from weakness into neutrality is a movement forward. So there does seem to be some sort of upward bias here. But I think that we need more here. I think we need to get into zone 1. And I think we need to get the RSI above 50. So perhaps a little bit of patience needed on the euro US dollar pair. It's not quite giving me what I would like to see. Yes, I can see that there is support on the weekly. Yes, I can see there's relative strength moving from weakness into the neutral area, but we're not in zone 1. And if we're not in zone 1, I'd be a little cautious. All right, let's take a look at the cable pairing, see if cable gives us something better to work with. And then what we'll do is we'll take a look at gold afterwards. All right, again, a top-down analysis here. Remember, the dollar is on the other side of this analysis. So with potential dollar weakness, this is quite interesting. Let's take this out. It does look as if we are breaking above our upside resistance here. And I think what we can do is we can put in a reference candle. See here, there's the reference candle, and then last week was the, so it was a four candle reference candle. So some nice bullishness coming through here on cable. Take a look at the cable's RSI. Is really looking very good, between 50 and 80. Let's go to the daily chart now. So top down is looking better. Is looking better. Okay, let's get rid of that. It's in zone 1. Okay, so a little bit more advanced than the euro-US dollar pairing. And what you can see is that the RSI for pound US dollar is above 50. So it's on the bullish side of 50, which is indicative of a bullish momentum. So we've got a nice reference candle on the weekly. We've got a nice zone 1 position on the daily. Let's see what the hourly is giving us. Okay, so I think it's worth keeping an eye on the hourly. We are at the central pivot, which is acting as resistance. So we can bring in the resistance here. Sorry, I want to just, here's the resistance. Here is the resistance, and I beg your pardon, it's now acting as support on the central pivot. So this is the principle of polarity, where resistance is turning into support right on that central pivot. And now I think what we can do is we can keep an eye on the moving averages. Are we going to get some angle and separation to the northeast? Okay, we want angle and separation to the northeast, and we want the stochastic to cross over. So there's a little bit more work to be done on the hourly chart. But if we get the triggers, if we get the trigger 1, if we get the trigger 2, then we want to see if cable will make its way through to the 80 plus area and hold. And if we get to that 80 plus area and hold, I would suggest we've got that underlying bullish momentum. Again, I would do a dual analysis here, because the US dollar is the counter currency here. I'd go through to US dollar, and I would want to see the US dollar showing some sort of weakness to the downside. So we potentially got the triggers here, but we don't quite have them yet, right? So it's all about keeping the eye on the triggers, making sure that they pull, then getting the angle and separation in the trend following indicators, and getting the momentum-based stochastic moving to its upper or lower quintile, depending if we're looking at pound, dollar, or US dollar. All right, let's take a look at gold, and then we're going to take a look at the DAX. Let's bring up gold, which would be an interesting analysis, an interesting instrument to analyze at this point as well. Okay, go through to the weekly chart here. I find this to be quite a tough chart to analyze. The reason that I think it's worth keeping an eye on is because there is an inverse relationship between the US dollar and gold. US dollar is moving sideways. I wonder how that affects the precious metal. Let's take out the peaks and troughs here. And effectively, what we can do is we can, let me show you this. So let's put in the reference peak here. Let's put in the reference trough over here. Okay, once we've got the references, here's the higher, sorry, I got these backwards. Sorry, put the trough there, put the peak there, my mistake, I beg yours. Okay, then what we want to do is we want to just put the higher trough here. And once we've got the higher trough, here's the higher peak. But now look what happens. Look what happens. is that this higher trough is violated to the downside. So the uptrend has effectively stopped. So what we have here, I think, is we can relabel as follows. I think we can put the peak here, and I think we can put the trough here. And I think we have to get some more price action on gold before we can get some sort of trend direction. It's nice to see that it's above the 34-week moving average, and it's nice to see the 34-week moving average pointing up. It's nice to see the RSI is above 50, albeit just off of 50. But I would like to see a higher trough followed by a higher peak, which we don't have yet. So no real trend direction on the weekly in terms of peak and trough analysis. Perhaps a slight upward bias if we take a look at it relative to the moving average. Okay, but it's not a surprise then that we are still in neutral. Okay, so we are building, I think, a base. Like the support here of the 1940 level, and I think that the 1940 level potentially is a support base for higher prices. But I think that we've again got to look at the US dollar, and we would like to see the US dollar move to the downside. US dollar move to the downside, I think then we can take a look at the precious metal and see if it's moving in the opposite direction. All right, let's do one more. Let's take a look at DAX. All right, so DAX for me, it's losing its upwards momentum. It's got a series of higher trough, higher peak, but this trend line, which is effectively a measure of momentum, has been crossed. And you can see that the cross is effectively DAX moving sideways. We don't really have direction over the last, I don't know, this must be close to 10 weeks. How many have we got here? 1, 2, 3, 4, 5, 6, 7, 8. 8 weeks. Okay, so 1, 2, 3, 4, 5, 6, 7. Yeah, 8 weeks. Okay, so 8 weeks of sideways movement, and we can see that in the daily chart. The daily chart's just moving laterally. What's interesting is that the RSI now has moved above 50. I want the candlesticks to move into zone 1. Okay, so we are in neutral. I don't think that we can do much with this until we move into zone 1, start showing some expansion in the volatility. All right, so DAX, unfortunately, just moving in that sideways direction. Okay, losing some of its momentum as per the weekly chart. Okay, that's as far as we'll go this morning. If there's any questions, go ahead and type those in. If there's any questions, please go ahead and type those in. All right, nothing coming through. So let's conclude at this point, and we'll pick up from tomorrow, see if we have some advancement on the positions we looked at this morning. Thanks very much, guys.